Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the euro currency and Great British pound as well. We'll take the brief look on it. In general, returning back to the discussion that we had in the weekend, the market was at the overbought, as you know, on the daily chart, and we suggested that it might be the downside pullback. And this indeed has started. Market right now is retesting this 104.56, 104.66 area. We said that might be the previous broken confluence, and here we will make a decision on possible position taking. In fact, if you take a look at the hourly chart, you will see that market already has made nice attempt to move higher from this level, but now is returning right back down. And additionally to our discussion in the weekend, we have right now a bit more inputs for making the trading plan. And in fact, we need to start right from the beginning, even to consider high time frames. Why it is important? Because the performance that we see here, it is not just technical retracement. It's standing on the back on all the stuff that has happened in two recent sessions. You probably, if you're watching on the markets, you probably know what's going on. So just a big crash on the Nasdaq by the two reasons. First is the Chinese artificial intelligence company DeepSeek has taken the lead in this sphere and showing everybody that you do not need big investments in superpower chips for developing this area, which is making the big impact on the rivals and in the United States. So the second reason for Nasdaq crash is the changing on the rate by the Bank of Japan. And actually the carry trade that were existing with the rising inflation expectations in the United States are starting to disappear, which is actually makes traders to unwolf these trades and go out of the big techs. So that's also makes impact on the performance of the currencies. And the recent drop that we see currently in rising of the United States dollar, it might be not just the technical response on some overbought that initially it was. So yesterday here we've got some additional drivers to this action. So if you take a look at the weekly chart, we will take a look at the dollar index, because on the euro currencies different charts on spot, on the futures, just to not be messed in these different charts. Let's take a look at the dollar index, and here you could see why I'm worrying about this. This is actually the pattern that we discussed in the weekend. On the weekly chart, we said keep an eye on the performance this week. If we will get here at the grabber, it might be very important consequences here. So on the euro currency correspondingly, this might be bearish grabber. Yes, it is not completed. Today is just Tuesday. The week is just started. But we can't ignore this potential pattern. So since we're considering kind of the bread and butter trade, or talked about this, it might be starting here, you could see the same picture actually on the weekly chart of the euro, but in opposite direction. So you could see that for the bread and butter to start, market hasn't reached the predefined important fib support, major fib support area. That's why this is not purely the bread and butter. But if even we suggest that this is bread and butter starting a bit earlier, then anyway, this should be 618 retracement. If in turn we suggest that it might be the double repo pattern here, because grabber suggests taking out of the top, right? So in this case, the upside action on the dollar might be even stronger, which makes deeper retracement on the euro currency. Maybe not back to the bottom, but at least it should be significantly deeper. So whatever scenario we're considering, whether bread and butter, double repo, anyway, downside action on the euro currency might be deeper than it was initially suggested. So that's why this chart is important. As we said in the weekend, keep an eye on the close price of current week. If we get the grabber, that might be really important. On the 10-year bonds, we do not see yet anything new, but take a look at market hits the neckline, which means that it should start forming on the right arm, and this suggests rising of the yields. So rising of the yields easily could support dollar and let them to form the double repo pattern, and then they together could start moving down or together could fail. So we do not know yet, but currently you can see that both patterns on the dollar index and on 10-year bonds are moving together, so they are standing in agreement with each other. That's actually important information for background and for Europe currency performance as well. Now, returning back to the euro, what does it mean? It means that this action might be continued for lower performance on a deeper retracement by the reasons that we have discussed. And actually, as on the euro currency, as on the dollar, as on the 10-year bonds, we're also considering taking a pairing of the hand shoulders. You could even get it better on the Great British pound. So on the daily chart, on the weekly chart, we have this big bearish pattern, but on the daily chart, we have smaller reversal one, and on the fall time frame chart, you could see it better. So particularly, this action might happen very soon in the nearest few days, and the same might be on the euro currency. I'm showing you cable just because here this picture is a bit clearer. It's not as choppy as on the euro currency. So a pairing of this right arm, which also simultaneously could look like on euro currency, is also another deeper retracement, could start on the euro as well. Fine. And next point. Take a look how the trading process in the beginning of the week started. So take a look, we've got gap down, low of the week, upper direction closing of the gap, forming the wash and rinse of the previous top of the week, market crop stops and collapsed below the opening price of the week. This is very bearish performance. Now market stands at the first support 104.30. So this type of action, together with all the stuff that we have discussed, make me to stay aside from the taking new long position by far, guys. So I would prefer currently to wait for a bounce, some retracement, and then maybe even make sense to consider possible taking the short position with a more extended downside retracement. So that particular what we could get. So here, as you also could see, some divergence exist on the fall time frame chart. On the hourly chart, that's actually what has happened. We said that let's keep watching this bottom of this channel, trying to use it for position taking because market keeps the shape. That's what we said in the weekend. And indeed, you could see at the first touch, in general, it was not bad upper bounce, approximately for almost for 80 pips, so not bad attempt. But later, it has been reversed and dropped. So currently, I would prefer to consider these two levels for a possible short position taken for a deeper retracement. It doesn't mean that we bury the ability of the euro to keep going higher, forming this hand shoulders pattern and so on. Absolutely not. It means that currently we're standing in our direction, and this downside direction has to become the part of the overall process. So we're just staying inside currently from the taking new long position on the daily chart and watching for this downward direction. So if you do not want to take the short position on intraday charts, you could do nothing, just wait for clarity either for a deeper retracement or, to the downside where you could take the long position at the better price or with the clear signs that everything that we said actually will fail. It's also possible if market will return back and start challenging the top around 105.30. In this case, as you understand, the grabber on the dollar index probably will not be formed this week at least. So that in towards what we have. Yes, a bit tricky situation, lots of different nuances here. It's very difficult to make the real decision. But in current circumstances, with a very small risk here, it's about 30-40 pips, considering what will happen, of course, if we will get something like just rusty white candle to the upside, we will not take the short position. But if it will be a very lazy gradual pullback, theoretically, it might be considered, why not? Supposedly, it's a bit tighter and risky scenario for position taking. You could even try to for instance, take the position, place stop slightly above this area. Why? Because this is definitely acceleration, the starting action of some driver. If it will be erased, that it will significantly diminish the chances on the further downward continuation. So to keep situation absolutely reliable and clear, market should not erase this recent sell-off. From that standpoint, you could use even tighter condition for this trading setup with a smaller risk. I mean, in cash, so placing it closer and watching for this performance. This is also possible. That's just in two words what we have currently. So let's see how situation will turn.